That was another soft session for stocks. The Dow up just 0.04%, S&P 500 down 0.24%, Nasdaq off 0.67%, the Russell 2000 down 0.32%. That marked the fourth straight pull day for the S&P, with big tech and AI names continuing to lead the slide. Breadth was negative, though there was a rotation under the surface into energy, healthcare, and staples. The NYSE breadth negative 1.09 to 1, Nasdaq breadth negative 1.17 to 1. NYSE volume 10.08 billion shares traded, and Nasdaq volume 14.73 billion shares traded. The 2-year was flat, 3.75%. Little change, with the Treasury curve slightly firmer. The 10-year down a basis point to 4.29%. Yield slipped after hawkish FOMC minutes landed as stale. 30 years down a basis point to 4.89%. The dollar index was down 0.04% to 98.22, edged lower after Fed minutes muted the tone. The euro was up 0.04% to 1.16, small lift after softer US dollar. The pound down 0.28%, weaker after lingering property and growth concern. And the yen was up 0.18%, firmer as risk tone stayed cautious. Crude is up 1.27% to $63.14, extended the rebound with supply chatter steadying the tape. And gold was up 0.96% as traders looked for safety into the Jackson Hole meeting. Big tech stayed under pressure as valuation concerns, AI competition, and talk of an AI bubble fed the sell-off. Despite the weakness, some argue this could still be a short-lived pullback, given how resilient the buy-the-dip pattern has been. Retail earnings added to the mix. Lowe's lifted revenue guidance on a big pro-segment deal. TJX raised full-year outlook. Target held steady but disappointed some with an internal CEO pick. And the Estee Lauder results were underwhelmed. Federal Reserve July minutes leaned hawkish, noting inflation risks still outweigh labor risks, but the reaction was muted since the minutes predated July's weak jobs report and better inflation prints. Traders still see around an 84% chance of a September rate cut. Tomorrow brings weekly jobless claims, existing home sales, and flash PMIs. But the main event comes Friday with Powell's Jackson Hole speech, which will be the market's next heavy lift. This stretch feels like the grind at the end of the workout week. The market is showing fatigue after a record run, and stretched valuations make it more vulnerable to pullbacks. That doesn't mean the cycle's over. Sometimes muscles need a little bit of a rest before the next push. The key is to stay patient, stay disciplined, keep your form, and let the setup unfold into Powell's speech. Stay disciplined, stay focused, stay profitable. I will see you tomorrow morning. God bless.